Did you know that over 90% of retail traders lose money in the markets? So in this video, I'm going to be sharing a few tips on how you can trade with a smart money rather than retail so you can be on the right side of the market. So firstly, we need to try and understand retail chart patterns because sometimes, yes, they do work, but over a long enough period of time, you will see that they've failed. That's why 90% of retail traders end up losing money in the markets. So we need to be able to pinpoint some of these retail charting strategies to be able to know exactly where retail is shorting and where they are going long. So we know where the stop losses are, where the liquidity is, where smart money will be filling their bigger orders. Now I want to show you an example of how I did that trading Bitcoin. Alright, so what we had here on Bitcoin is we were trading this little range, and the easiest retail pattern known to most new traders are trend lines. Okay, trend lines are the most common retail chart patterns that every new trader ends up using. So knowing that information, I sent this alert in the group on Telegram, the group that we have running, and I identified a demand zone underneath. I said we have a demand zone and liquidity resting under the low at 70,406. Retail will be looking at that trend line, which is prime for stop losses under it. Liquidity must watch price action. Okay, so I identified that we have two touches on the bottom of a trend line, and as soon as another attempt at this trend line, we are going to start seeing retail longing that trend line. We're going to see price coming here, retail going to get aggressive because we have a nice trend line. So a classic move for smart money would be to obviously fake them out. Where they're going to place their stop losses most likely are going to be under this low at 70,406. And then classic would be to sweep them out, chase their liquidities, chase their stop losses. The smart money will be looking for those stop losses. We'll be coming down and then we'll reverse the price. Okay, so I want to just show you how that played out. So at the time I sent that, we were around here. Okay, so I was looking for that touch. Let's identify exactly where I'm talking about, right there. So we've got the touch, we've got a little move, little bounce from that trend line. Okay, so retail traders must have been a little bit satisfied that, yeah, the trade is going in the right direction. However, subsequently what happens is we move back down and we take out the liquidity that was resting under that low that I said for my members of the group. So we swept that liquidity, and don't forget, we would have had loads of people shorting this now. As soon as that trend line was broken, we would have other retail participants would have said, okay, the trend line is now broken, we are going to start shorting this. But ultimately what happens is smart money would have taken more liquidity because loads of shorts over here, and then they would, they reverse the trend. Okay, so let's get rid of that. So as you can see over here, and delete these. As you can see, we had the sweeper liquidity, and then smart money bought this back up. We got a classic retest of the trend line, and this is what I sent out in the group. Okay, so once we've got that move, we went long as soon as we sweep the liquidity under that low, and then I said it played out absolutely perfectly. Now retail would have shorted the backtest of that trend line, and guess what? Their stop losses will be placed above those equal highs, so I expect the market to gravitate towards the liquidity up there. So retail would be looking at backtest of that trend line. They would have been shorting here. Where would they place their stop losses? They would place their stop losses above these equal highs right here. Okay, and look what happened. So retail shorting, got a little move to the downside, would have made some retail traders happy that the trade is going in the right direction. However, what happens? Smart money just takes it back up, searches for that liquidity. What did I say? Liquidity will be resting above these equal highs. We take that liquidity, and then we drop it back down. Okay, pretty simple. When I show it like this, it seems very, very simple. However, you must be able to identify these retail chart patterns. Where would that liquidity be resting? Because that's how smart money operate. They want to know where retail is placing those stop losses so they can fill those big orders and reverse the price. Okay, that's their aim. They want to take leverage out of the system. They want to liquidate you so they can start filling larger orders and make more profits. That's the name of the game for smart money. So when you're able to identify how they're doing it, not only are we using just candlesticks and TradingView, if you know our channel, you know we trade order flow. So if you were trading order flow, you would know when price was sweeping this liquidity, we would have order flow available to confirm the trade. We would know that when this was happening in real time, we had huge decreases of open interest at the time. That means positions were closing, stop losses were getting hit. Okay, obviously candlesticks, you can't see that, but on the footprint on order flow, institutional order flow, what they're looking at, we could also see it as well. So if you want to learn order flow, you want to see what institutions are looking at instead of retail chart patterns, head and shoulders, triangles and trend lines. You want to trade properly, link is in the description. Go and take the course, get a deeper understanding of order flow. I can promise you that you'll become a much better trader. Okay, so again, when we were sweeping liquidity above these highs, the order flow again confirmed huge decreases in open interest, and then boom, the price went down. Stop losses got hit. So traders, I hope you can see that trading with retail is a very dangerous prospect. You want to be trading with the smart money. This is just a small example. We are doing these kind of trades using order flow, using what they're seeing, what the smart money is using. We're doing this every single day. So if you want to be a part of our group, if you want to learn how to use order flow, link is in the description. If you want to see more videos like this, please hit that subscribe button, hit the like button, and we shall see you in the next video. Peace.